Alrighty. So before we jump into the review for today, before we jump into what happened to me today, before we jump into the option premiums for today, I want you guys to let me know how you traded today. What did you do? Bonds, commodities, index, SP 500, stocks, Magnificent 7, crypto, coin. What did you guys do today? Let me know. Today was the FOMC event, the FOMC meeting, the rate cut, all that good stuff. I think today's one of the most predictable FOMC events in a very long time. So let me know if you guys had a successful day. So I see gold. Yeah, I saw gold hit new all-time highs. That was fairly nice to see. Options, small SPY win. Did you short it, long, 0 DTE? No trade today, watching MES. Yes, same for me as well. We'll talk about the intricacies of today's price action. We'll talk about the time frame. Time frame is so significant on a day like today. And it's a very, very, very important day to understand because a day like today, you can blow up your account very easily. Very easily. Alrighty. So if anybody else has anything they want to share for today's price action, you can let me know. In the meantime, let's jump into this document right here that I'm creating. Weekly Premium Harvesting, tradingwars.com. 0 DTE short after Powell. Yeah, I think that short right here at the macro resistance, the rate cut was pretty much expected. So the short was a good play. I think that was a very good play. But again, it comes down to your rules and the intricacies of your time frame. Let's go back to here. What Rich and I do is very simple. We trade like institutions. We don't trade like retail. Let me mute this. We trade like the institutions of the markets. What I mean by that is I want to see the market pull back significantly before I put my money into the charts, or I just want to collect premiums to the poor people of the world that are getting chopped up during Monday and Tuesday when they do not understand the external context of the charts. External context and internal context is the 50-50 split between market analysis for me. Obviously, analysis is subjective sometimes, but for me, I like to think of a chart as a battleground for buyers versus sellers. And we obviously cannot ignore the economic value of the chart because that's what it is. It's the economy in a nutshell. That's what the S&P 500 is, right? So we cannot ignore federal rate cuts. We cannot ignore job rates, things like that. We can ignore it to a certain extent by not watching CNN or not listening to people that just want to invoke fear or greed within you. But we have to be aware of the timing of the events. That's why we call it timing catalysts, right? Timing catalysts are significant because economic reports change the way in which the price action of the chart operates. And I think we can really use premium selling to our advantage when it comes to executing external and internal market context. Monday and Tuesday, I said it every day, or during those days, Monday and Tuesday is a prime example of when you went to sell premium to people that do not understand the external context of the market. And just go to social media, there's a ton of people that are questioning why they're getting chopped up left, right, and center because they simply just do not understand the economic value behind what's going on. They simply just do not understand why market participants are not willing to involve significant cash on Monday and Tuesday. Well, the most obvious reason is FOMC being on Wednesday. We will collect their premiums and we will feast. Therefore, let's go ahead and implement this to our trading. That's what Rich has been doing as recent as May. May is when he really started to go significantly with this system to collect data and stats. We have this huge spreadsheet over here of every single weekly put that has been sold with MES. And now we're going to expand our horizon to stocks. We're going to use Tesla. We're going to use NVIDIA. We're going to use liquid names, right? Think of the Magnificent 7. And we're going to collect premium when the external context has an almost guarantee that the markets will not dip significantly. So if my voice is breaking up, I do unfortunately have Wi-Fi issues. I have Wi-Fi issues every now and then. It's a little unfortunate, but it is what it is. If you guys can hear me still, let me know. That's the premium selling in a nutshell. And for MES today, MES, ES, we definitely have to understand the internal context now. Because today's the day, right? Today's the day. FOMC is today. Everybody is getting their fireworks ready. Everybody's getting their popcorn buttered up. Now we have to understand the internal context of what market structures need to hold or fail to dictate who's trapped and who's in control on which time frame. And we have a ton of notes in here because FOMC is important. So we have to talk about a widened range. We're not expecting a 20-point FOMC range, although that has happened before. I feel like I do remember a very small FOMC range in the past. But for today specifically, considering the fact that we've gone up in a straight line, 300 points in 2 weeks, I think the overall consensus is that the average maximum range, the average true range could definitely get hit, in which we can see selling exhaustion, right, into significant supports, or we can just see the market rally higher and higher. That's not up to us, right? So I'll just read this quickly. FOMC day, prices currently hovering around yesterday's low. Big falls breakdown attempt of the 4 a.m. wick. This is the last chance for bulls to remain in absolute control through defending a prior day's low. The 4 a.m. low breaking down will be finally the first sign of volatility, expecting a ton of chop before the FOMC event at 2 p.m. Eastern. Structures are clear. When FOMC comes around, everything is a 50-50 gamble. No shame in sitting out. If trading, you must respect stops and targets with a concise trade plan. Let's quickly go at the chart. So we had 66, 53, 75. That was the 4 a.m. low. So this box right here is the RTH price action for today. We literally just hugged that low. And then finally, we broke down that low off of sellers holding below macro resistance. Let's go back to the notes. In order for price to produce a pullback, volatility must make a return. So it's important to note that structurally, price has printed a false breakout of Monday's high. Let's go back to the chart. Monday's high is right here. I have it jotted as a significant macro resistance, 66.8125. And it's really no surprise that the FOMC high rejected the Monday's high, and that kept sellers potentially active. But we needed confirmation of sellers being active with the breakdown of the 4 a.m. low. That's what happened for FOMC. So the selling case definitely played out, right? If you wanted to short the Monday high, false breakout, this is a Fibonacci trap, 110%. You will be trading against the trend, but this is a bet that you can be willing to take at 66.8125, right? You are trading against the trend, but if it's in your trade plan to risk 1R at the macro resistance, I don't see a problem in that. Let's go back to the notes. Today's 4 a.m. low, 66.5375, must fail for a warning sign number 1 that sellers are making a return. So 66.53, that is just the first warning sign. This is also the breakdown of yesterday's low, a daily low breaking down for the first time since September 2nd. Below there, we can hopefully open the floodgates and slice through a ton of supports with too many trapped in the absolute highs. Be aware of intense liquidation, especially during FOMC, in which we'll have to wait for selling exhaustion into macro levels. So below 66.53, we had 66.39. Last Friday's low is the first down. And then we have 66.16, which marks last Thursday's bullish timeframe alignment breakout trigger. This is a major intraday line in the sand. Its failing will be the major warning sign in alignment with last Friday's low retaining resistance. So if sellers are to be in control for today, if we are to see a true trend day to the downside, then 66.16 is your line in the sand. If you're shorting 66.81, then 66.16 and 66.39 must be targets, or in my opinion, you're not managing your risk properly based on the context of the chart. 66.16, it must fail to get macro supports in play. 6616 did not fail. The low of FOMC, the low of the day today, is 6611. So the fact that this breakout structure from last Thursday, the all-time high bullish time frame breakout structure, remained in play means that the intraday trend did not conclude. And if the intraday trend is not concluded, then we can expect no macro pullback. And if there is no macro pullback, you guys know what I'm doing. I am doing absolutely nothing. So this is why I had the line in the sand drawn up here, the yellow line right here, the line in the sand being 66.23 on the 4-hour time frame. This line in the sand needed to fail, or I would just be content without trading. It's simple as that. That was my trade plan for today. I needed to see macro time frame pullback. It didn't happen. The line in the sand needed to fail, or the intraday trend is going to continue. That's what I talked about in the notes. And if the intraday trend is continuing, there's not going to be an entry for me to take. I want to see panic. Today, there was no panic at all. Everything was very predictable, and the intraday trend continues via last Friday's low false breakdown. We had the overnight low false breakdown, and we had the breakout structure from last Thursday holding on first test. Not only did it hold on first test, but we also got back above the 4 a.m. low, which showcases that the trend is continuing. It showcases that intraday sellers absolutely fumbled the bag, and now we will have to remain patient for what happens tomorrow and Friday, or even potentially overnight today, if sellers are able to sustain price action below 66.81 and 66.96, because that will remain macro resistance until broken, right? Once this zone fails, for sellers, once buyers break out, then we can presume bullish time frame alignment is back, and it's back in full force, that is, because technically it's still active. It's back in full force, and we can just go up and up and up to 67.20, 67.40. You get the idea. So today is a very complicated day. In my opinion, it is. And that's what FOMC is. FOMC is complicated by nature, right? Test, test. You guys hear me? 1, 2, 3. I feel like my internet just died. Am I back? Test, test. 1, 2, 3. You guys hear me? Test, test, test. I feel like my internet just died. Unfortunate. Alrighty. But yeah, that's pretty much all for today's session. I also talked about in the notes that if you're not somebody that's prepared or experienced enough to participate in a volatile FOMC session, there's absolutely no shame with sitting out. And if you're somebody that's on the macro time frame, there's no shame in missing the low of the day, right? We know that a macro time frame level will come into play eventually. If it takes a few months, if this rally happens to last a few months until the end of the year, then it is what it is. The market will do whatever it wants to do. I think today was just an intense intraday pullback, but today was not an intense macro time frame pullback. And the line in the sand, the box at the range high, so this is the box at the balance highs, where we broke out the previous all-time high. The fact that this box held for buyers just showcases why I'm saying that. So I'm not pulling that out of somewhere where the sun don't shine. I'm saying that purely based on the technicals and the structures of the chart, right? This is not a macro time frame pullback. It's that simple. We held the line in the sand. We held the Thursday all-time high breakout structure until that fails, until the line in the sand fails, and which is now going to be today's low of day, 66.11. Then we can potentially see panic selling. We can see people chasing short. We can see people saying the top is in. That's where we want to take advantage of trapped sellers and advantage of the higher time frame remaining bullish when the sentiment is overly bearish. So all in all, very chill and just a very predictable FOMC event. We went from the most significant resistance to the most significant support on the smaller time frame, the intraday range, and we pretty much just closed where we started the day, right? There's not much volatility, and we did not get more all-time highs. I think it's a little unfortunate that FOMC could not give us deeper retracements, but as I always say, It is what it is. We're not going to tell the market what it wants to do. We will simply align with whatever it wants to do. And that's it for today's session, guys. My Wi-Fi is acting up, so don't feel like we should continue reading the book in case I cut off and then I'm reading like 2-3 pages and you guys are not hearing my voice. But anyways, I'm gonna keep on working on this weekly premium harvesting strategy that Rich has been doing, and I'm 100% gonna jump in on board because the macro time frame levels are not active all the time, and this is pretty much free money because I'm so good at contextual analysis that I know when people are gonna get chopped to smithereens. That's the best time to take people's premium. Absolute best time. Other than that, if you have any questions, comments, concerns, you can let me know. I will see you tomorrow. Let's go ahead and check the economic calendar. I don't think there's anything else for the week. Tomorrow we have the unemployment claim, Thursday, September 18th at 8:30 a.m. And Friday we have nothing. So let's just quickly talk about some ideas heading into tomorrow. We do have to break down today's low of day now, or we have to break out today's high. That's pretty much it. If the 8:30 a.m. news tomorrow wants to be volatile, then today's low must fail. We cannot defend 66.31 and 66.39 if you're a seller, because that will just showcase continued momentum. And obviously 66.81 and 66.96, the macro resistance breaking out, is absolute bullish control continuation. And there's pretty much nothing to do, right? If you want to buy the highs, that's up to you. If you want to short the highs, that's up to you. That's not what I would be doing. Below today's low of day, let's hope and see to get some macro pullback into macro high quality lows of interest. Other than that, Friday is looking like a chill day. And look at that, our best friend Tesla printed a holy grail here, inside outside bar on the daily charts. Will this holy grail result in expansion to the next resistance, 440? 440, let's see, 440. Oh, it's 439.74. We shall see. Enjoy the rest of your day, guys. Tradingwars.com if you need anything. If you need a one-on-one with me in order to reach out, be aware of scammers, and I'll see you next time.